Welcome back to the Brent Bruce Daily, where each day we take a look at where home loan interest rates really are. And I give you the inside scoop of how the interest rates are moving and why and what to expect in the future. Today is March the 2nd, 2023. It is 2:42 p.m. Central Time. Let's take a look and see where home loan interest rates are right now. And if you like this information, if you want to follow along each day for these updates, make sure that you like, subscribe, and share on my YouTube page. So let's take a look and see where we're at. We're currently down 23 basis points on the day. Unfortunately, continuing with basically the only thing that we're really able to identify here is momentum. So the momentum has been consistently, we've been losing 20 and 30 basis points a day, awaiting some sort of report that will come out about inflation that's going to get us to turn back around. Again, we had a whole month of reports that left us all scratching our heads because they just didn't seem to make sense. And there was all kinds of excuses about, seasonal adjustments and things like that that we shouldn't see here on the coming reports, starting with March 10th when we get the jobs number. And that was what really turned us around from the great run that we were on, was back on February the 3rd when that very same report came out. So we're looking forward with our fingers crossed to seeing that report come out on March the 10th. So currently down 23 basis points. You can see that once again, this is when this report came out, February, March 3rd. And it has been just a downtrend, a consistent downtrend ever since. And remember, if you're watching this report for the first time, when you see these charts going down, that means home loan interest rates are going up. This is an inverse chart. So we started off the day below this Fibonacci level and have dropped all the way down here. We've really been fighting our way back throughout the day. You see us down 23. I think we were down quite a bit more than 30 at one point during the day, but we do not want to have to test this floor of support under us at 99,716. We will see. Currently, look at the 10-year Treasury continuing to climb up 7 basis points. We're now at 4.07. And remember, if you follow along with this channel regularly, you know that traditionally mortgage interest rates for a 30-year fixed mortgage usually ride about 2% higher than the 10-year Treasury. Now, that has not been the case, and we talked in depth about why that is the case, not the case currently in previous reports. But even if it was, 2% over 4.07 leaves us at 6.07, which isn't where we want to be. Remember, we're talking about trying to get to the 4.875% rate area by July the 1st. So we have a lot of ground to cover after what was just a very difficult February. Where are we on our home loan interest rates currently? Now, again, this is where we take a look and we see what the interest rates really are. You are looking at my pricing engine. As a broker with multiple banks that I work with, what really are the interest rates? So you can see right here, this bank here, 11 Mortgage, is at 6.875%. They've been consistently pricing at a best out of all of the banks that I work with. They give you a credit of $371 at 6.875 on a 30-year fixed. Very well qualified, 800 FICO score, 25% down conventional loan. So this is a very well qualified client. Let's open this up. If we were to pay $929 to get to 6.75. So you can see where banks, these are actual men and women behind computers making subjective decisions as to the interest rates that they're going to charge for the day. It's not all just computers spitting this information out. So there are people in what's called the secondary market that sit behind their desks and make decisions as to where they want to price business for the day. And that is why sometimes you see them pushing up their rates in front of a report that they're concerned with, bringing down their rates in front of a report that they believe greatly that report is going to come out favorable to them. So in this case here, what do you see? After a couple of rough days, we continue to actually be at 6.875. Why is that? Because nobody wants to say 7. None of the banks want to say that they're starting with no points at 7. So they're going to hold on as long as they can to offering a 6.875. You might even see them go to a 6.999. They just don't want to post a 7 so that they don't. It's kind of like, when you're selling a house. you don't want to say $250,000. You want to say $249,000, right? Because you want to stay under that $250,000 range because you might have a different viewership at that price point. So that's what you're seeing here at 6.875. I think that we're really pushing it. You can see we're only a 371 credit from going up to that. There's that 6.99. I didn't even notice that earlier. Or pushing up into the 7.0. You see how they don't even have a 7.0? They have a 6.99 and then goes to 7.125. They're not even showing a 7.0 because they're saying, why on earth would we make our pricing 7.0 instead of 6.99? So because that's marketing from their perspective. So that's where we are right now. We're just waiting anxiously for the report to come out on the 10th of March and hoping that it gives us some more realistic employment numbers and job numbers so that we can turn back around and begin to regain some of the ground that was taken from us in the month of February. I think this is going to happen. I mean, all the information that we've gone over for the past year is all valid. This is all good information. The numbers, the comparative approach that we've done with our personal consumption expenditures and our consumer price index, those are valid approaches. But these reports are coming out just not seeming to make sense with what we're seeing around us. Do you see everything continuing to get more expensive? No. You do see things around you continuing to stay high, but not necessarily going up. So understand that inflation is 12 eggs costing $5.50 instead of $5. It is not staying at $5. So if a dozen eggs cost $5 and next month it costs $5 and the next month it costs $5, that inflation rate is zero. You understand? Because it didn't go up. Now, we do want to see things like eggs and all these other products, gasoline, come down and the overall inflation rate to come way down to 2.0% on the core personal consumption expenditures reading. But understand that when I look around, while I still see things being high, I don't really feel like they're going up from where they have been in the past six weeks, 2 months, 3 months. So let me know your thoughts on that. I will get back to you again tomorrow, let you know what is happening in the market, and we will talk to you then.